guys, so in this last segment of part 7, we are going to revise 3 very important standards because all of which have already featured in the exam so many times. So it is pretty much important for us to understand how these 3 standards influence an auditor's activity during the audit. So I'm going to cover 240, which is on fraud completely, and 250, which is going to talk about auditors' duties with respect to laws and regulations, and standard number 299 on joint audit. With this, we will be covering almost all the standards that are applicable to your exam. We have already covered so many. So before I wind up this entire revision series, I would like to let you know that we have already covered right from standard number 210 to 20 on quality control, and then of course we also did the entire coverage of the planning series 300, 320 which is on materiality, 315 and 330 on risk assessments. Then we have got into the 5 series. We did a segment on 500, which is exclusively speaking about the entire concept of audit evidence. Now after that has been taken care of, we had 501, 505, 580, which are the 3 and 510 on opening balances, the 4 standards that of the 5 series we have covered. Then an exclusive session on analytical procedures and sampling, we have covered standards 520 and 530 to have a complete understanding of the 5 series. So the standards that we haven't covered in the 5 series are 560, which is on subsequent events, which is post the audit, if at all you get to know anything which may influence your judgment, that, and 570, which is on going concern. And I believe people can cover these 2 standards. And just in case if I get a chance to do one more, we will put up all those balance standards in one lot and we will also take care of that. Now before we even move on, I would also want you to know that we did a segment where exclusively we discussed internal audit, standard 610 on using the work of internal auditors, and we also discussed section 138, which is applicable for those companies as mentioned in that section as per the Companies Act. Also along with that, in that session we discussed the whole concept of audit risk. So I think that has brought us till here, and we also have to have an understanding of why we have to do all of this. As a matter of fact, we did start our entire discussion with saying that the auditor's fundamental responsibility or the objective of doing the entire audit is to obtain sufficient and appropriate audit evidences to make sure that the financial statements are free from material misstatement, and then he can go ahead and safely give a true and fair opinion. But on all this point, also along with these 3 standards, I would also want to know, what is the comfort zone with respect to standard number 230, though it's not a critical standard to be dealt across separately. I will give you a couple of quick insights about standard number 230 on documentation so that we will be complete in all respects. So let's get started, guys. This would be the the last set of standards that we will be dealing in this revision series, and as already mentioned, this would probably cover all your 8 chapters in the new syllabus, except for that audit in computerized environment, where it's a small topic, and I would like to take you to take the lead in doing that small part. And also along with that, we have a complete revision series ready for the company audit part and audit reports, for which the videos are available for quite some time, and also quick tips on how to present vouching and verification question answers, along with questions on special audit, which are in the likes of education institution, hospital, cinema hall, clubs and all that. I also made the same video wherein you can as well understand how to write those answers. So I think these revision videos, the series of these revision videos have given you an insight of what to do and how to do in audit. And just in case if it has done, please do let us back know. And if there is anything that you are also willing to contribute as part of a feedback, it's always good if you can share it as to us, so that we can try and improve that in the next coming session. So it's always a learning experience. So I think you should be upfront and share that upfront in the comment section, whereby you can let us know what is that extra. Of course, I do understand if you're commenting on the chapters that we haven't done, there's a little work left for you to do, because all I did is to put all efforts to bring in these 10-part revision series. And hopefully what we will also do is, by the time these videos are completely taken care of by you, we would also provide you a combined video of all this, wherein you can do a marathon of all of this, and we'll make a playlist to make sure that you do. If it's possible to do a complete marathon video, we will do that. If it's taking too much of length and time, if upload issues are there, then we will make a playlist of all these 10 revision videos and put it in a playlist for you to go through the whole of October depending on your time slots, and make sure that you rock in the exams that you write in November. So this last piece, let's get started. First, before I start 240, like I told you, I'd just give you a quick insight on standard number 230, which is on documentation, audit documentation. And what are we actually trying to do in audit documentation is also something that I would want to refer it back. So let's move on here, wherein we talk about what is audit documentation. Now this, again, as we go, let's start with definition only. Every time we go with definition. So now also we talk about what is audit documentation, the definition of audit documentation. Audit documentation is nothing but a record of, it's a record of audit procedures performed, record of audit procedures performed. Record of audit procedure performed, because you have to have a proof, right? So tomorrow if somebody is coming and telling you what did you do in the audit, this is what it is. Record of the audit procedures performed. Relevant audit evidences obtained. Relevant audit evidences obtained. Relevant audit evidences obtained. And most importantly, and the conclusions reached. And the conclusions reached. That's the whole point. So it's a record of audit procedures performed, relevant audit evidence is obtained, and the conclusions reached. That will decide what you have done in the audit, and you have to keep a copy of that so that it is useful for future references. So that's the first and foremost thing that I would want you to know about audit documentation, which is nothing but a record of all the audit procedures performed, relevant audit evidence is obtained, and the conclusions reached. Then going forward from here, we also need to understand why do we document. So why becoming always an important question. The two reasons. Now audit documentation, guys, it serves two primary reasons along with 6 additional reasons. Now this is some piece that I want you to very clearly get into the understanding, because I think you should have a thorough understanding of this. The two primary reasons: one, it serves as a basis. It serves as a basis for auditors' conclusion. It serves as a basis for auditors' conclusion. It's a very clear point. It serves as a basis of the auditor's conclusion. And not just that, it's an evidence, right, that you did the audit. It's an evidence. It serves as a basis for the auditor's conclusion. And how will other people know that you did audit in accordance with standards? So therefore, again, documentation is an evidence. It's an evidence that audit was planned. Audit was planned and performed. In accordance with essays, right? All the essays. It's compulsory that you do this, because these two things are the fundamental reasons as to why we document. Because tomorrow somebody comes and asks you, it could be any regulatory authority, it could be an ICA asking you for clarity on doing the audit. So it serves as a great basis for you to support your conclusion. Yeah, this is the reason why I got the true and fair conclusion. This is what it is all about. So you can always be very clear about telling that. Apart from telling that as well, it's also important that it serves as an evidence that you are randomly going and telling that you've complied the audit and all that, but it's always better that you try and be very clear about what you're talking of. So you say, and your evidence serves as a very basic purpose for saying that the audit evidence was performed. Audit was performed and audit evidences were collected in accordance with the standards. So you write this as two primary reasons as to why you obtain the audit. Okay. So guys, this is one of the most asked questions from this particular topic. What is the need for documentation? Two primary, and now let's see 6 additional purposes. 1, serves, or you can say assist engagement team. Assist the engagement team. Assist whom? The engagement team to plan and perform the audit. Assist the engagement team to plan and perform the audit. Assist the engagement team to plan and perform the audit. Helps, okay, we are telling them to plan. Once they do the work, should we supervise or not? So again, the documentation helps to direct and supervise, direct and supervise, direct and supervise the audit. Most importantly, whoever has worked on this audit enables audit team, nobody can run away from their responsibilities, enables the audit team to be accountable, to be accountable for their work, enables audit team to be accountable for their work. Nobody can run away from their responsibilities. Whatever work you do on the documentation, you will be signing on it. So enables the audit team to be accountable for their work. And the next point is a very simple one, because here you're talking about keeping this, like there is one of the points that says that you have to retain audit documentation for a certain period. I'm sure everybody knows it, I'll get to that, but it is nothing but a record of audit work performed, record of audit work, which is, it can be used for future. You can say that used for record of audit work used for future, whatever is future relevant, that one. Then remember we studied about quality control aspects. So if we studied about the quality control aspects, who will check what in the quality control aspects? It's important for you to understand what will the quality control reviewer come and do. The quality control reviewer will also come and check what the documentation only, right? So it enables, actually 5 and 6, it does two things. Enables what? A quality control review, enables a quality control review. And not just it enables a quality control review, it also enables external inspections. Any external inspections, it enables that also. Okay, so that's what the whole thing guys here. Audit documentation, it serves 2 basic and 6 additional purposes, and that's exactly what we are looking at. It's a record of all the audit procedures performed, and it serves 2 primary and 6 additional purposes. It's a very important part of our discussion, and that is exactly what we try to do and understand in documentation. Apart from this, I would also want you to let 2 more important points in this revision video about documentation. One is let's say the third point, as we discussed, assembly of audit file. When should you do the assembly? Right, assembly of audit file. If quality control reviews and all are there, before even completing the audit, you will have to assemble. Otherwise, normally it's an administrative process. Administrative process, and you have to complete the entire thing within 60 days. Within 60 days from the completion of audit, or 50 days from the date of audit report, you can say that. Because see, this is just a process of putting everything together in the file and all that, but that also should not be ignored, right? So audit documentation is just an administrative process of filing everything into the files, and that should be done within 60 days from the date of signing of the audit report. And one more point that I would like to tell you is about the retention of audit documentation. I hope everybody is aware of the retention and keeping it in very clear terms. 7 years you have to retain the documentation. 7 years from the date of signing of the audit report. From the date of signing of audit report, you have to keep it for 7 long years, and it's a mandatory requirement that you keep the audit documentation for 7 years. And if there is any departure from any laws or regulations, or if you have not done something because there was a particular reason for it, and there is inconsistency with respect to audit evidences, for all these reasons you have to record the reasons and keep it. Okay, so I'm just writing all those as a departure from relevant requirement, departure from relevant requirements. Or one more point I can add up here is that there is inconsistency in audit evidences, inconsistency in audit evidence. So all this, what you need to do is, for all this also you have to maintain documentation. Okay, it's a fairly very simple limited coverage standard guys. Standard number 230 talks about maintaining audit documentation, and audit documentation here has spoken about maintaining a record of audit procedures performed and all that, and then this is the piece that you right now see on screen. You take a screenshot of that. That's the major part that you're talking about. 2 primary and 6 additional functions is what the audit documentation, which is one of the favorite question of the examiners from this, if it has to come for 3 or 4 marks. Now if there's a multiple choice question or a true or false question, they can always ask. They have already asked so many times that audit documentation be retained for 8 years, and that will be a false statement. People, they just get you confused to that books of accounts, right? So you will see, then you will immediately get a confusion in the exam. Books of accounts 8 years or documentation, all that. So be very clear. Books of accounts are for 8 years, and audit documentation, okay, working papers, so that are maintained for 7 years from the date of signing of the audit report. Okay, so that's the whole point, and I think I can give you a small technique to remember that right now. You remember this word accounts. Accounts has 8 letters. Okay, so the word accounts has 8 letters, and that is exactly why you will retain it for 8 years. Books of accounts can be kept for 8 years, so no confusion. And since this is kept for 8 years, the only other thing that can be kept for 7 years is what? This. But there also you can have a technique. There also the word auditor has 7 letters, so auditor has to keep it for 7 years. Okay, this is 8 years, and auditor has to keep working papers for 7 years. Go by the letters. The word accounts has 8 letters, and that's why it's called, that's why it's 8 years, where in books of accounts. And small techniques, guys, something to remember, right? So not to mess up in the exam, because it costs 1 mark, and it's not easy to just let go of things. So it's something that you can find out. Okay, so it's a first standard. In this part of the discussion we have audit documentation. Now moving up, next we have standard number 240, which is a very important standard. Now 240 is on fraud. Before we talk anything about 240, I would also want to take you through a little bit about fraud, because fraud has been a separate chapter in the new syllabus. So what is discussed in fraud? Fraud as such, what is it? It's an intentional, fraud is an intentional act. Fraud is an intentional act whereby use of deception, that is cheating, use of deception. And why do you do that? To obtain unjust or illegal advantage. To obtain an unjust or an illegal advantage. So fraud is an intentional act of using deception, that is cheating, to obtain an unjust or an illegal advantage. And because you know this, misstatement can happen because of 2 reasons. One of the reasons why misstatement can happen is misstatements happen because of errors. The other reason why misstatement happen is because misstatements happen because of fraud. Okay, so fraud is nothing but an intentional act. The only thing that separates fraud and error is unintentional, but whereas fraud is absolutely intentional, right? So fraud is an intentional act whereby you're using deception, that is cheating, to obtain an unjust or an illegal advantage. Now if you ask a broader question on how does fraud happen, fraud happens because of fraudulent financial reporting. Fraud happens because of fraudulent financial reporting. And not just that, fraud also happens because of misappropriation of assets. Misappropriation of assets. Now if you see what exactly that means, fraudulent financial reporting talks about falsification, forgery and all that. Falsification of documents, you're talking about falsifying some documents, or forgery, changing something and it is not true and all that, forgery. And then intentional misapplication of accounting principles. Intentional misapplication of accounting principles. These are all some of the points that you need to try and understand. It's about fraudulent financial reporting, falsification, forgery and intentional misapplication of principles. And then misappropriation of assets is again broken down into misappropriation of goods, and the last but the most common kind of fraud is defalcation of cash. Defalcation of cash, wherein there is frauds like teaming and lading, suppressing cash payments, and or inflating cash. Suppressing or inflating the cash, teaming and lading frauds. And I want you guys to focus on this part. Teaming and lading, that alone can be a question. Let me give you an insight on a quick note. Teaming and lading is a fraud whereby what are you doing? You receive money from somebody, you're adjusting it in the name of somebody else, and then you're doing this repeatedly again till the time this keeps going, and always one person's money. Say for example, you received it from one debtor, you won't pass the entry, you'll hold on. When second debtor pays you money, you will adjust the first one. Okay, second debtor is kept open. Then when third debtor pays, that is when you do second. So this one is open. So always that one debtor's money is always with you, and it's keep going on. Before any intimation goes to the debtor, you keep doing this. So you adjust first one. When you receive, you won't pass the entry, you'll hold it. When you receive the second one, you'll adjust the first one. Then third one, then second one. Subsequently, you keep doing this, and this is exactly what is called a teaming and lading fraud. So I guess you got the insight of what fraud exactly is. Fraud is an intentional act wherein you are using deception or cheating to obtain an unjust or an illegal advantage. Fraud leads to fraudulent financial reporting and misappropriation of assets. There are two ways of doing fraud, which is talking about falsification, forgery, and intentional misapplication of accounting principles. And in misappropriation of goods, wherein you see what exactly is misappropriation of goods, that also can be spoken of. And then you're talking about defalcation of cash. You know what defalcation of cash is suppressing cash receipts or inflating cash payments, or then doing teaming and lading. All these are the broader reasons for fraud. Now, why, very important question, why there is a fraud happening? Why? Because there is a incentive or pressure. Somebody is feeling a pressure, that's why they are doing a fraud. Or somebody sees some gain in doing it, so they wait for an incentive. Or somebody does it because there is an opportunity to commit fraud. And the third reason is quite amazing. You know why they're doing fraud? Because they don't feel they're doing a fraud. They've rationalized their attitude, or they rationalize their mind, saying that what they're doing is right. Okay, so attitude or rationalization. Now there is nothing that I can speak about this, because he is somebody who has rationalized their mind. What I'm doing is I'm fine with it. It's not a fraud. And when they think like that, there is nothing that you can really do about it. Okay. So the incentive or pressure, there's an opportunity, or attitude and rationalization, all of which can lead to quite a great damage. Okay. So that is all the reasons, the four reasons that you see as to why fraud happens. It can happen either because of an incentive or pressure, it can happen because of an opportunity, or there is somebody's attitude or rationalization which allows, their mind allows them to do that fraud and comfortably even get away with it. Now that's the best part. You do it and you don't feel that you've done something wrong. So, and there are examples under each of this which I would want you to go through, because that's one of the important parts of this story. Now let me take you through the two important parts. The standard 240, wherein you're talking about one, responsibility of management. Yes, this is very important, because the primary responsibility to prevent or detect and correct a fraud, primary responsibility to detect a fraud rests with the management. We are not involved in finding out frauds. See, we are not set out here on a mission to go and find out frauds. The primary responsibility to find out a fraud is the responsibility of management. Having said that, then what is auditor's responsibility? Auditor's responsibility is during the course of the audit, if at all he comes across a fraud, then auditors have to bring it to the attention of management or TCWG. Now, please understand, you are not going on a hunting exercise to find out fraud. What is a fraud? And we will go and set out and find frauds. No, that's not your objective. What's your objective is very clear. You do the audit, but during the audit, now when as matter of fact, auditor should be what? He should follow professional skepticism, and I hope everybody knows what professional skepticism means, right? It's an attitude of having two things. Professional skepticism is about two things. What? A questioning mind. It's about questioning mind and being alert to conditions. Being alert to conditions. So it's very important. You have a questioning mind and you're being alert to the conditions, right? That's what professional skepticism is about. So be alert like that with respect to fraud also, because you are nowhere on a hunting exercise to go and find out frauds. Nobody has given you that responsibility also. Your responsibility still remains the same. What is that? Obtaining reasonable assurance that the financial statements are free from material misstatement, and then you give the opinion. That's it. That's your job. You are not doing anything more or less. Okay? Frauds happen, that is because of lapse of internal controls, which is the responsibility of management to set up a zone. Primary responsibility always rests on the shoulders of management. It's not on you. You don't have to take it on your head. Got it? And after that, it is also important for you to understand that auditor's responsibility is to keep it during the course of the audit. Whatever is the fact that you have seen this, it is important for you to understand how you will be using this as part of the entire thing to drive that content. So you follow professional skepticism, you go by your audit, gather evidences, and during the process of audit, if at all there are indicators, now that is where I come to the last topic in fraud, indications of a possible fraud or a possibility, indicators of possibility of fraud. You know what this is called? Indicators of possibility of fraud. This is called a fraud risk factor. It's called a fraud risk factor. When you say this is what fraud risk factor is all about, that's what you need to understand. Fraud risk factor is a possibility of fraud. It's not a fraud. And when you find a fraud risk factor, all that you need to do is to obtain more audit evidence. You have to probe into that area because your professional skepticism reveals that there is a possibility of a fraud. Obtain more audit evidence. And but then towards the end, if auditor concludes that financial statements are not free from misstatement, that too due to fraud. Now obviously at this point of time you will report to management or TCWG, report to TCWG, and based on the response modify report as per SA 705. Things don't work out, that's what you're going to do there. Modify the report as per SA 705. I hope you got this one, guys. So it's a very quick insight of what the entire concept of fraud is all about, right? Three parts to the story that I've discussed here. First up, we talk about what is fraud. It's an intentional act of using this deception. Fraud happens because of fraudulent financial reporting and misappropriation of assets. And then fraud happens because of the four reasons as to incentive of pressure, opportunity, attitude, and rationalization. And what is management's responsibility? What is our responsibility? The concept of professional skepticism to be applied while checking for fraud, and the concept of a fraud risk factor wherein you have to obtain more audit evidence to see that it's just a possibility and not the truth. But if at all you conclude or you find that there is a possibility of a fraud and that really needs to a suspected or an actual fraud, communicate it to the TCWG, and if they make corrections and take action, very good. If they don't, you might want to modify the report as per SA 705. Okay, that brings us to the conclusion of standard number 240, and the next standard that we are looking at in this series is SA 250, which is on auditor's responsibility with respect to laws and regulations. Now at this outset, as I always start with, I need to tell you and understand that there are two types of laws and regulations. One which have a direct effect on the financial statements, maybe like income tax laws, labor laws. There are certain laws that have a direct effect on the numbers. But there are certain laws that do not have a direct effect, do not have a direct effect. They do not have a direct effect. And now that they do not have a direct effect, this is the major part of the story here. Because they do not have a direct effect on financial statement, you should not think that they're not responsible. Like say for example, prevention of child labor. Now you are saying that as per the Child Labor Act, children are not to be employed. But on the factory premises, you found some children working. And okay, you found this. What if tomorrow some vigilance authorities find this and they put a seal to the company saying that because children are employed on the factory, let's lock this down. Now, that's a serious thing that will continue to, that will end the continuity of the firm, which is like there is a issue on going concern now. As of now, it was just spoken about as a law that has nothing to do with financial statement. But right now, the entire going concern is stopped. So all I'm saying is there are certain laws which affect the numbers, like payment of gratuity act. You compute gratuity. Payment of bonus act. Compute the bonus. Income tax act. You go for provision for tax. So all these have a direct effect on the financial statements. While there are some laws which do not have a direct effect, but they not having a direct effect, no, that could possibly lead to an indirect effect. You don't use the word indirect because not used in the standard. You say do not have a direct effect, but some way or the other they also have a effect. That's the point. So first we need to be very clear about this classification, that there are two types of laws that have a direct effect and which do not have a direct effect. Now what are we so bothered about in this standard is non-compliance, because if they are complying with the law, nobody is having a problem. No, you just gather sufficient approved audit evidence to see whether they are doing that properly. Non-compliance, what do you mean by that? Whereby you're doing something contrary to the laws or regulations. If you do anything contrary to the laws or regulations, that's what leads to a non-compliance. Okay. Now, again, getting to the two most important things here: responsibility of management, and responsibility of auditor. Now guys, again the story is very simple. You need to understand how we are dealing with this, because again it is not our primary responsibility to go and make sure that somebody complies with laws and regulations. It's not our business. But having said that, I also want to make you understand that it is a responsibility of management. What is the responsibility of management? To make sure that the entity complies with all applicable laws and regulations. This is the part of the story here, right? So talks about non-compliance, wherein you talk about responsibility of management, wherein to make sure that entity complies with all applicable laws and regulations. Then what is the duty of the auditor? See, it is their duty to comply. Our duty is to just check, that is evaluate whether there are any non-compliances. Auditor's responsibility to obtain sufficient appropriate audit evidence that the entity has or complies with the laws and regulations. So our duty in this standard is to obtain sufficient appropriate audit evidences to make sure that we are not responsible. Definitely, I'm making it very clear once again, guys. Auditor is not responsible for complying. Okay, auditor is not responsible for complying the laws and regulations. That is a duty of management. Our duty is to just obtain an understanding of what are the laws applicable to them and see whether they have complied all the laws and regulations. Now for this, auditors to conduct an extensive understanding about what laws are applicable. That I can tell you, because first make a list of what laws are applicable. What is auditor's duty here? Auditor obtain a general understanding or obtain an understanding of laws and regulations applicable to the entity. It's a very important point. What are the laws and regulations applicable to the entity? Make a understanding of that. And C, then you obtain sufficient appropriate audit evidences, okay, in this regard, that they have complied. Now let's get to the major part and the conclusive part of the standard, because the standard is very simple. It talks about what laws are applicable to the entity whether they have complied with it or not. All laws may or may not have a direct effect, that also has been discussed. Then we spoke about duty of the management and duty of the auditor. And auditor has to obtain a thorough understanding of what laws are applicable, because sometimes it may so happen that auditor, after preparing a list of all the laws applicable, he's telling the entity why you didn't comply. Entity is like, we don't know. So there can always be a possibility that management is not aware of the fact that they have to comply with the laws and regulations. I think that is going to create a problem later. Okay, so you have to obtain sufficient appropriate audit evidences in this regard, and you have to be very clear about what evidences are being collected here, and make sure that there is no non-compliance. Now, very important point, if auditor identifies or suspects any non-compliance, what are you supposed to do? First, report to TCWG. Now 9 out of 10 times we expect that TCWG should take an action. If they act upon it, just like how you saw in fraud, if you communicate to them and if they take up the action and everything is taken care of, then there is no problem at all. Just in case they don't do and non-compliance remains like that, and if the non-compliance appears to be intentional, which is like again a fraud, you might want to communicate that to the TCWG. And very important point is to consider the effect on audit report. Now what you need to understand at this point of time, when you say consider, I'll explain that consider piece here. Consider the effect on audit report is nothing but, if auditor, there are two things here. If auditor concludes, now you know this, if auditor concludes that there is non-compliance, when you use the word concludes, normally when do you use the word concludes? Only when you have evidence, right? So if auditor concludes that there is non-compliance, then he will go for qualified or adverse. Okay. Then if auditor is unable to obtain sufficient appropriate audit evidences, then auditor shall go for qualified or disclaimer. Now this purely depends on the evidence, guys. This is absolute 705, SA 705, depending on what evidence you have or not. So because if you have come this far, if you're doing this, I think 705 piece is very easy, because that's the ultimate reporting part of every standard. So there I don't think you will have any problem. And lastly, you also have, if you have identified non-compliance, duty to report to enforcement authorities. On your own, if you are going and telling, sometimes it may breach the rule of confidentiality, okay? But if it's not on the own, and if you're going and communicating to them because you have to, it's a responsibility, so that you have to determine responsibility as per laws and regulations. That's the point. So you will determine as per laws and regulations. You will not go and simply outburst and tell whatever you're supposed to, because that's not needed all the time. So yeah, auditor should obtain an understanding of the laws and regulations applicable to the entity, obtain sufficient appropriate audit evidences, and if the auditor identifies or suspects any non-compliance, you report either TCWG, consider the effect on audit report, and see if there's a duty on you to communicate to the enforcement authorities. So that is what is the whole crux of 250. Okay. So 250 spoke about two types of laws which have direct effect, do not have a direct effect. What are you supposed to do if you identify? What is a non-compliance? When something is contrary. And then what is the responsibility of management and auditor? And this whole piece of your reporting aspects. Right? That brings us to the last standard for this session and also this entire series is standard number 299, which is on the responsibility of joint auditors. What is the responsibility of joint auditors? First of all, who are joint auditors? Where more than one auditor is involved. where more than one auditor is involved in auditing the financial statements, where more than one auditor is involved in auditing the financial statements. Now that's what is something that relates to joint audit, where more than one auditor is doing the audit of same set of financial statements, then that will only be termed as a joint audit. So you need to understand when and how joint audit is to be done. First of all, joint audit, as I told you now, is done by more than one joint auditor. And very important, SA 299 does not deal with using work of auditor of a component. Using work of auditor of a component. You know what is when I speak about using the work of auditor component? Because this is dealt in standard number 600. So 299 is responsibility of joint auditors. You got nothing to do with the work of a component. Component here is about the branch, division, subsidiary, associate and joint venture. This is what is discussed there. But the auditors of this, you can use their work, but that's discussed in standard number 600. So standard number 299 does not deal with any of that. Standard number 299 straight deals with joint auditors responsibilities. And of course, very simple, and there are only a couple of points that I would want you to know from the standard, because this standard as such, if you see what is the crux part of the standard, each joint auditor is responsible for their own work. Each joint auditor is responsible for planning and performing their own work, and this is all very clear. So when you say joint audit, there are two things that come to somebody's mind. What is that? One is sole responsibility. Where is the joint auditor solely responsible? And where is the responsibility joint and several responsibility? Where is joint and several? This is the major part of the standard. Sole responsibility for three areas. So I can straight tell you: one, work allocated to him or work assigned to him. Okay. Two, for his own audit program. And then for all the audit documentation that he has to maintain. For all of the audit documentation. Now this is something that definitely you need to be really concerned about, because you have a sole responsibility with respect to all these. But when you talk about joint and several responsibility, what is it with respect to joint and several responsibility? Now if you see what is the joint and because for all these you are doing it, so you are responsible. One, work not divided. For all the work that is not divided, all you guys are responsible. Okay. And two, I want you to concentrate on this point. Matters brought to knowledge of one auditor. Matters brought to knowledge of all auditors by one, on which all agree. See, you guys have agreed together, right? Then you're all responsible also together. Understood? It's a very important point. No, though only one person told, why are others bothered about it and all that. So the fact is that it was brought by one, but it's collectively responsible for everybody, because all of you have agreed. Otherwise, don't agree. Okay. So what happens if I don't agree? We will see that piece also. And for the NTE, nature, extent of audit procedures, all of you are jointly and severally responsible. And then I can add up one more thing. For all presentation and disclosure aspects, all apply. And then lastly, compliance of relevant statutes, all the following the standards and all that. And for audit reporting. This is the major part of the standard, guys. Rest of the part, I think you can have a glance, but if this is something to be revised very well. Yeah, this is the thing. One very important thing. What is joint audit? Where more than one auditor is involved in doing the audit, and it does not deal with this piece. The non-applicability of the standard is also discussed. And if at all you find something where you want to communicate to the TCWG, you can do so. Now there is one very more important point which I'll be discussing in the next one, but before that, what is sole responsibility, what is joint responsibility? Are you clear with this? 3 points are sole and these 5 points are your joint responsibility. Now, very important question to the last piece of the standard, wherein we just spoke about something where a matter was brought to the knowledge of all partners, but some of them didn't agree, right? The joint auditors didn't agree. So is there a obligation that because majority people agreed, I should also agree, right? What is that happens in case of difference of opinion? This is the last but very important point. So many times it's been asked. It can be asked as a true or false. It can be asked as a short question. Difference of opinion in joint audit. Difference of opinion in joint audit. Now please understand, if there is a difference of opinion in joint audit, one, auditors are not bound by, remember very clearly, I'm writing it, not bound, all in caps, not bound by majority. They are not bound by majority. Very simple. Okay, auditors are not bound by majority. Each auditor can give a separate report. I mean, whoever are agreeing together, they all can give a collective report. See, normally there is one report issued in the joint audit. After joint audit is over, normally one report only is issued. But if there is only difference of opinion, then they are not bound by majority. Because other two told, I should also tell, there is no rule of that sort, is what I am trying to make it very clear. Each joint auditor can give a separate opinion. There is no rule that you're bound by any majority. Each auditor can give a separate opinion. But when you're doing this, when you're giving a separate opinion, you might care to include another matters paragraph as per SA 706. Just say that other auditors have made other reports, so you have to just care to give a other matters paragraph. Otherwise, there is nothing that stops you from doing any of these things. I hope everybody is understanding this. Auditors are not bound by majority opinion. Each auditor can give their opinion. You can give a separate report, but just make sure that there is a other matters paragraph. That's it, guys. That's what we have in this particular standard 299 read with 706 to give the other matters paragraph. So guys, I hope that brings us to the end of this revision series. I've recorded 7 parts, and this being the 7th part. I'm very glad that whoever have watched all this through, and if you've been watching all this, thank you so much for being a constant support. And every time, it's only because you guys watch, it gives me a feeling that I have to do more and all that. And thanks for all the feedback that people have been sharing. And just in case you have anything more to share, you can always keep sharing on the platform. We also have an Instagram platform which is titled CAHK Classes, which is my official handle for classes. So if you guys haven't been there yet, you can, if you're watching this, you can always get onto Instagram. And of course, if it's disturbing and deviating, do not. But then otherwise, if you want to use it for a purpose, you can always get onto the Instagram channel, wherein we have always been posting something or the other very much relevant to your studies. So yeah, that brings us to the end of an amazing 7-part revision series, 3 parts of which are already available on YouTube. So that makes it a 10-part revision series. And hopefully, now that this 10th part is also released, the 7th part is also released. So all 10 parts, I try and bring them all in a playlist. And first up, we'll also try to make it a combined marathon video of all the parts, if it's possible to do so. But I think we will have time limit issues. So just in case if we don't, then we'll try and do that. And if it is possible to do that, that will be amazing. Otherwise, you have all the 10 parts in one place. So all I wish is you to take cues from this revision videos, keep constantly revising. That's the key for a subject like audit, and make the most out of it. So I hope your exam goes well in November, and if at all these videos have helped you thus far, and you believe that they're going to help you further in your preparation, do share these with your other friends to absolutely help them also. There is nothing that it's always grow together is a great philosophy. So you can share it with others and also let them do well in their exams. So I wish you all the best for the upcoming exams, and I just hope that you come out with great results. Thank you, guys.